Bitcoin has pumped to a new, fresh, all-time high daily closing price, but that is not the signal that I'm looking at in today's video. This particular signal showed up 4 years ago, and the price exploded after that point, basically resetting the market for a very short period of time, just long enough for the masses to get extremely excited for the pump that followed. On top of that, I've got plenty to get through with the traditional markets. Lots has happened overnight with Trump and his new executive orders and other orders that he is giving left, right, and center. So let's not waste any time. Hit the like button, subscribe to the channel. It is your home of macro cycle analysis with me, Jason Pizzino. We're covering cryptos, Bitcoin, of course, the stock markets, and the real estate cycle, the real estate and economic cycle as we lead into this final peak. Now, I've got heaps to get through in today's video, along with where you can find yourself one of these Bybit debit card if you want to be spending your cryptocurrency throughout this bull market peak. More on that later in the video. But first up, let's kick it off with the traditional markets. We've got to get through this to make sure that we're seeing things progress, at least as the way I'm expecting them. Right? At least the way I am trading the markets and the way I'm investing the markets. This one here is your II Investor Sentiment Survey. What the hell is this? Well, it's an opinion of individual investors by asking them their thoughts on where the market is heading in the next 6 months, and has been doing so since 1987. So, nearly 40 years now. This is an amazing tool, at least what I've seen from the data, that shows the masses typically get it wrong. And from this point, you can see that every time they get extremely bearish is typically around a low. So you might be wondering, well, I want to know about Bitcoin. Where's the price going? Don't worry, I've got that for you. I've got targets to the upside and areas that we have to look at for particular confirmation and invalidation. Because at the end of the day, no one knows exactly what happens on the black side of the chart. It's all about probabilities. And that's why I'm looking at these signs here, these surveys and signals and indicators, to get a read on what the market is thinking and feeling. People's feelings is how they typically invest their money. They generally don't go too deep into their own analysis or their research, and it's about feeling. Do I feel like it's time to be buying, or does it feel like things are not going to continue on in the direction we think it is? Now, in terms of this, there is an objective way to look at it. We have the data here. We can go back many, many moons and have a look at the times when they weren't as bullish or as bearish on the market. And here it is. We'll start with 6 months. The red peaks are when the investor sentiment survey is bearish, or that's the bearish line. And when you look at the extremes of it, that's basically when the market is most bearish. So just in the last 6 months, you can see the two highest peaks when investors were most bearish were at some reasonable lows. You got November 28. We could take a look at the S&P 500. Where's November 28? You see here is that the market at just before it pushed to a new fresh high. So they were getting bearish as the market was breaking out into new highs. But that's not the best one. The best one to me is when we get back to August. You've got August 8th, and here is July as well. So basically, these are the weeks ending. So the 5th of August was the dump. We'll take a look at the dump here. There it is all the way back here. The yen carry trade, the biggest dump that it had seen for nearly 12 months. You had to go all the way back to the Middle East conflict, and they were getting the most bearish at the lows. They got bearish on the just before the breakout, when you get this breakout to the new all-time highs, and they got bearish at the lows. But as I said, that's not even the best ones. We take a look back, even 3, 5, 10, all times, and you can start to marry up where the lows came in the market with the time when investors were most bearish. And we're on our way up to another one now. So I wanted to show those two examples where investors can get bearish just before breakouts, because I guess people think that you're seeing a double top and they are expecting, like you saw through here, they're expecting the market to collapse from that point. Sure, it came later, but now we're even back past those previous highs. But in the cases of some of the significant lows like August, have a look there through October. But the one I had highlighted on the chart here was back in September 2022. And then, of course, the October low, which was the the bear market low for the S&P 500, this low right here. That's when they were their most bearish that they had been for the last 3 years. And so you can take this thing all the way back, have a look at where it was at the GFC low, the most bearish it is on the entire chart, And the investors at that point were at their most bearish. So like 70% were basically saying over the next 6 months, they think the prices are going to go even lower. So as we look at the sentiment, the sentiment has been ticking up bearish for the stock markets, but we're not seeing the same thing here for Bitcoin and the stock markets, of course. You know, they're heading to new fresh highs. But it seems like the sentiment is resetting, and this is sort of the big one that I'm getting to with Bitcoin and crypto, with this particular signal where you see things absolutely skyrocket. So the fear and greed index, you've got a lot of fear here, still at 41. Previous close was 37. So sentiment in the S&P 500, that's what this is about here, was fearful. A week ago was fearful. A month ago was fearful. We can look at the timeline. So around the lows here, again, fearful. S&P 500, zoom right in, you've got the 20th, you've got the 2nd, you've got the recent one here on the 13th, and you know, if we remember all the dates of the previous lows, they essentially line up with a lot of these extreme fear points in the market. April also saw a low and started to creep to new all-time highs, and the market was still fearful as it broke to new all-time highs, and then also at that August low, they were at extreme fear yet again. Seems like there are still enough investors on the sideline, not in the market, too fearful of a possibility of the market going lower. As we looked at with the investor survey, they think that there is a possibility of it going lower. This is the highest bearish reading that it's been recently, as we looked at. And in that case, there is still more money on the sidelines. And as you can get to new highs, they start to freak out and they get FOMO. You probably know from yourself. I definitely know from myself. When prices go higher, people get FOMO and they start to put more and more money in. And that's what typically leads to the tops when the most amount of money is. And remember, there's a very, very big difference between an altcoin and the stock markets. Heaps and heaps more money can come into the stock markets than does in altcoins. That's a fact. We don't need to dispute that here. Now, quick shout out to Americans and the absolute fantastic news. Just 2 seconds here. Trump pardons Ross Ulbricht. So I got into crypto back in 2017. I was listening to it and hearing about it in 2016. And unfortunately for Ross, he got put in prison, life sentences in 2015. So this, it sort of struck home. He's a really, really young guy, but fantastic news that Donald Trump announced on Tuesday that he had granted a full and unconditional pardon to Ross. So he kept his promise. Trump has kept another promise here. And here's the news article if you want to have a look at that. On to other things. Trump proposes tariffs. Now, I don't have a hell of a lot of time in this video, but I'll go through it in future videos because I also want to get into how Bitcoin can collapse. I know I'm putting a lot of things in here. Essentially, Trump proposes tariffs agency, raises questions and confusions for experts. Essentially, it looks like he's bringing in the external revenue service instead of the internal revenue service. So you might be getting zero taxes. That would be absolutely amazing. In that case, I'll see you over in the US in the very near future. My wife's American. We could probably get some good passports over there and we can get rid of all of the taxes here in Oz, right? I think in the longer term, this is potentially going to be inflationary for the US. We're starting to see the US dollar come down as well. Very early days, but research has shown that consumers often end up footing the bill for higher tariffs, but you're going to be having zero taxes as well. So it's a bit of a balancing act here. Let's see if the tax cuts across the board, income tax drops to zero, and Trump really enforces the tariffs. Yes, it can lead to higher prices overall because, of course, you're taxing the goods that are coming into the country. It might force spending habits to focus more on buying locally made. But of course, locally made can also be quite expensive because the labor in a country like the US is obviously higher than in a country like India or China or wherever your service getting those goods from. Mexico, of course. That is going to also play effect on the US dollar. We'll get to that in just a sec. But let's have a quick recap of the last 24 hours for the stock markets. S&P 500, another day up here on Tuesday. So another strong move. We've got some resistance coming up at 6,100 points. And as per previous videos, the macro structure still in play. Plenty of downside support, even if this does fail here. 56 and 5,700 are still the levels in play. Same deal for the NASDAQ. Had another stronger day here. So a higher close. And the Dow Jones, another very, very strong close. So in each of the cases, the stock market's coming up to the next resistance levels, and that being the lower swing tops that came into play. So a pretty interesting one to watch now over the next couple of days. Can they break above and form some support above those key levels? That's going to be obviously strength and will allow it to tackle the next resistance levels. However, if it fails here, then it's just going to be a longer time to digest the move and potentially get on the next leg up. So more on that as the prices continue to unfold. The home builders ETF also had a little bit of a pushback here overnight, coming up towards the next resistance level. So we're watching this for signs of the long-term cycle coming to an end. This is the home builders. They, in the previous cycle, gave a very early warning sign that there was something wrong with the real estate market and the economy in 2005, leading into 2006. The stock market topped in 2007. Real estate prices topped 2005, 2006 for the US. And then, of course, we all know what happened after that. GFC, major collapses, 50, 60% on the stock markets. In some cases in the US, 50, 60, 70% down for home prices. We're not there yet, but it's important to keep watching this one in case of any early warning signs. However, on the flip side, the financial sector is still looking relatively strong, having a big move up. And of course, if the banks at the moment are doing relatively well, considering where they've come from, then they're still making profits. Therefore, we're still seeing higher prices. So still in the short term, there is a pretty strong bounce out here. Let's see if it can hold. That's the big thing now. Can it hold above 49? Now, for the stock markets around the globe, before I get back to the US dollar, higher prices here for Australia. Big day yesterday, another day today, reasonable day, closing a little higher. Canada also pushing a little higher here, top 50 in Europe. Another day at fresh highs here, getting close to that 25, 24 and a half year fresh high. So same deal, stocks are still continuing up. Now, for the US dollar, it's had another day down, big day on the inauguration day. So a lower swing top formed, rejected there, and another push lower. Now I'm keeping watch of this particular range as it is the largest correction in this essentially bull market to the upside, right? The bull market from September into this current peak of January. So if it extends past this range, further in price, further in time, that's the first early warning sign. Two more things need to happen. A breakdown of 50%, which is currently at around 105, and a breakdown of those swing lows, which is very close to the same level there. So around 105.4. So it starts to break under that level, failure underneath, that would most likely be sending it even lower to test back at these previous lows. And in that case, it's not necessarily bad for assets. I mean, we're most focused on, say, Bitcoin, right? You're getting lower US dollar. Typically, you would see higher prices there for BTC, which leads us over to BTC and having a look at the market sentiment here. So Bitcoin cryptos, short-term, slight bounce here for crypto. That's just on the daily. But overall, if this trend holds here, we now have, at least on the short term, on the daily here, a higher low forming for Google trend words. So Bitcoin and cryptocurrency. Let's take a look back over 12 months. And we've had some higher lows continuing to form. You had February of last year back at 32 for BTC, 31.32. We had the 30s back when the market went a little bit quiet there in June. Lows here at 26 and 27. And at the moment, seems to be a higher low forming above the previous peaks there of August when Bitcoin collapsed to that $49,000 low. So in essence, this is a fantastic thing because you're beginning, could be, at least with this spike in this week, you're beginning to see higher lows form and the possibility of breakouts. Now, on the topic of breakouts, we have seen a breakout on the fear and greed index. Yes, it took me most of the video to get here, but I wanted to get on with the important stuff first. Traditional markets, very important, at least from my own analysis, and then we can identify what happens with Bitcoin and cryptos. 84 on the extreme greed. So this chart shows it a little clearer. Now, the breakout, the big breakout here that happened last time 4 years ago was right there in January. Basically, crazy enough, around the same dates. There's later in January, so the last week of January, we're the second last week of January now, pretty good for 4 years ago. And then this move on the breakout. After that, quick minor reset into fear. This time we only got neutral. It bounced within a couple of weeks, back up to extreme greed, held there for several days as the market went from 30,000 up to 58,000. So spare me a few bucks. Yes, it didn't do 100%, but it did on the next push higher up to 61, 62K. But the volatility becomes even more extreme. So if this is the retail mania bull market, the start of this phase now, then you must expect the volatility to be even crazier and the emotions are going to be even higher. The emotions were relatively subdued over the last 2 years. The bull market started 2 years ago in November, so just over 2 years ago. It did not start now. Now is the final stage. And as we get closer to the top, as we get further, higher in the prices, and I'll show you some of those extensions to the upside, some more price targets, people will stop believing that the bull market started 2 years ago, and they would say that it starts now because this is where the hype begins. That's what they call a bull market. This is just the mania cycle of the bull market. It's that Wall Street cheat sheet, if you're familiar with that. Peaks up, then complacency, and then it basically dies off again. That's the top end. So people think that that is the bull market, the thrill, optimism, hope, euphoria. No. Bull markets start from the anger and the depression, and they build into the euphoria. And bear markets start from euphoria and build into anger and depression. So if you can wrap your head around that, we're in the final stages now. That doesn't mean that it ends tomorrow. And it doesn't mean that it's bad news or if it's depressing or bearish or any of that sort of BS, right? It's just a read on the market and getting a time frame so that you don't screw yourself at the tops of the market again. There was a tweet I saw from Murad the other day. Nothing against Murad. Nothing at all, right? He's the altcoin, meme coin specialist guy. Does heaps and heaps of tweets. His tweet was move your targets up for meme coins. Move your price targets up. Now, on the one hand, some people could make absolute killing. Maybe they should move their price targets up. What I've seen from the past, from trading, from investing, and you might have seen this yourself, once you start moving your price targets up higher and higher and higher, you're essentially at the mercy of the market now. You've stopped following a plan and you're basically just on the hype train and gambling. You're hoping for higher and higher prices. Stick to your plan, take your profits. Doesn't matter if you don't sell the top tick. It really doesn't matter because the majority of people will not make profits. If you've made profits in this market, you are of the very few, the very minority that make profits. And if you make significant profits, 2x, 5x your account, you're even the smaller amount of people that do it. Because at the end of the day, there's always going to be a loser on the other side of that trade. And if you're making good profits, you are very much of the very small minority of people that are winning in these markets. So in terms of the market sentiment, hearing that, seeing that, reading that about moving your price targets, I'll leave that up to you. At the end of the day, it's your trading plan and your strategy. For me, stick to it. I'm going to stick to it. That's what I'm going to do from this point. And that's what we're looking at when it comes to the swings. So this is a big one for me here, watching how the market is pushing higher, especially on this breakout. So taking another look at this market sentiment breakout, that's essentially what we've been watching and I guess hoping for, because if it doesn't break past this high and make a higher high, then the market sentiment is essentially drying up from this point. But it looks like it's on another trajectory like it was in February of 2021. But do remember that the swing becomes even crazier to the downside. So look at the dump into the fear was slightly lower than the extreme fear dump at 29, 28,000, yet the price was at $44,000. And it still went higher after that point. But over the long term, over that 4 or 5 months, as we've been covering every single day here, that's when you start to see essentially the interest die off. And you got this bit of a rounding top. Now, I'm not saying it's going to happen exactly the same like this, but this, I think, might be relatively similar, especially if this part of the market sentiment is now looking like it's playing out somewhat similarly. Maybe there's another flush out, we don't know yet, but we have had a break above the market sentiment top just in the last 24 hours. So that means if it continues on, most likely going to see higher prices. And if that's the case, the uptrend here that has rejected 2 of the last 2 bull markets. We're currently in the 3rd one. So I guess 3 of the last 3 bull markets, starting with the 2017, could get broken, and that could send prices absolutely bonkers to the upside. Also, the USDT chart is looking relatively weak, which is a good sign as well. But before I get to that, as I said in the intro, links in the video description is where you can get this, your Bybit trade crypto, get a crypto debit card. Obviously, there's plenty of other things to go with there. Works amazingly well. Just tap it. You can take cash out. You can do all sorts of things with the card. Yes, there are fees. You're not going to get away from fees. It's bloody crypto and Bitcoin, right? There's always going to be fees on something, but there's the flexibility. And a lot of these other places don't have that flexibility at the moment. You've got no KYC with Bluffin, so another channel sponsor. And of course, for the Aussies, you've got SwiftX there if you're looking to onboard into cryptocurrencies and trade on an Australian exchange before maybe you're dipping your toes into something else. For Bitcoin and those long-term price targets, as I promised you in the beginning of the video, and I still have to get to how Bitcoin could absolutely collapse. Stick around to the end of that. I know that's only for the diehard fans here. We're looking at the extension, so I'll make this relatively quick. Now, the extensions here are using extreme levels on our swing chart. So monthly swings in this case, low to high, projected off the August low. Note how it's sliced very cleanly through the 50% level at $78,000 and then hit dead on the 100% level. So Bitcoin did 100% of this move, this exact move here, projected off the low and did it in a much shorter period of time, which means things are speeding up and you're coming towards the end of a move, right? Yes, it can take months, that's normal. But we're looking at the next extension. I'm just going to look at it from the August low, December top, projected off this current January low. So let's grab this tool right here, low to high to the low. Now, look at the first red line. This is the 50%. This is the next level overhead. That's $118,800. Round number, let's just call it 118,000. I've got that as a next price target on a bigger term time frame. It won't be without any sort of corrections along the way, and I'll show you a shorter term time frame next. But if we're looking at this next weekly, and I think this is even a monthly turning point, yep, then the 50% level to watch out for is 118. If it slices through it, then there is a much higher probability that we slice up towards the 136 and the 148. So some nice big targets up there. On the flip side, if it finds resistance at the 50%, then that essentially slows down the move and there is less chance, not impossible, but there's less chance of it reaching that 148 on the next swing. It could still do it the swing after, but it could take a little bit more time. So it's just a matter of controlling your emotions on these moves up. A failure at the 50% is not a great thing because it can also come back, test these previous tops and come back underneath these levels. You want to see it happen like this. You want to see a nice massive slice through and continuing higher and then remaining above that level so that it can consolidate and go for that next target. So that's for the longer term there. Let's drop it back down to a shorter term time frame. Let's have a look at the weekly here. So we'll look at these shorter levels. This is from the election low to the current, well, the previous old all-time high at 108 off this low. And that 50% level comes in just overhead at $110,200. So if this is already a rejection here at 50%, that's what we have to watch out for over the next few days and few weeks, because if it fails here at 50%, then we come back, test into this zone of 97, 98, 99, and potentially to the downside. So that's the invalidation, right, of any sort of further move to the upside. However, over the coming days, if we see it slice through 110, hold above that level, there's a higher chance that we're going to go to around 130, 131,000. Then we can start to target the numbers above. But for now, what we need to see, at least the bulls need to see, is a clean break of 110. This is on the weekly extension here. Clean break of around 110, and that could send us quicker to around 130, 131. Now, if it does happen quicker, you would have to expect, if it is going to be sustainable, that there's got to be some time for the market to catch up. So you can see last time, fast moves. This is all time for the market to catch up. We know that it takes 20% of the time it moves, or like we did with the numbers when we did the research, it's about 10 to 15% of the time the market's moving, and about 85 to 90% of the time it's figuring out what it wants to do next. So if it moves for 1, 2, 3 weeks, this other period, it's figuring out what it wants to do next, okay? So if we do run up really quick, expect there to be some time off here, figure out what it wants to do, and then start its next move. Happens every single time without fail. So they're the big price projection targets to the upside. Now, a quick look at USDT. I'm definitely going to run out of time. Here is Trump. The total cryptocurrency market cap is looking relatively strong. Trump, so on and so forth. Anyway, we'll look at that in tomorrow's video before I go too long with this one. The USDT dominance has been relatively good to the bulls. Each time it tests this low to bounce, the bulls don't want to see this. The bulls want to see this. They want to see a breakdown of this chart. So it's continued to test these lows, bounce back above. 2 days ago, tested the lows, closed back above. Yesterday, however, failed at these highs. So we got a lower swing top in the formation right now with a close underneath the diagonal, getting very close back to 3.7 to 3.8. And so you can read this for yourself here. It's my F off massive bull market mania. We get a breakdown of that. That is going to be phenomenal. So that could send the prices up. That could be that nice slice through for BTC at 110. So everything seems to be balancing out here. Should we get that breakdown of the USDT dominance, it could potentially line up very well with slicing through that 50%, which then slices us up, pumps us, whatever, to around that 120, 130 level. All right, I say 120 because it's obviously another psychological level, but I think within that swing, provided we break the 50%, probably looking around that 130. And that would also send the total cryptocurrency market cap shooting up to breaking to new fresh highs there. So that's the update on the dominance. Now, I know the video's gone pretty damn long, so I'll make this relatively quick. We're looking at MicroStrategy and how that could collapse BTC. This is a long way off, so if you're not interested in it, like the video now, subscribe to the channel, check out the links for Bybit and all that sort of stuff down below. But if you are interested in some narratives that could eventually play out or not, keep watching. MicroStrategy bought $1.1 billion of BTC. I'm leaving this at the end of the video because I know some people just can't balance a bear and a bull state of mind. Hopefully you can. That's why you're still here half an hour later. 1.1 billion, right? So they've bought this 11,000 BTC at an average price of $101,000. They now have 461,000 BTC. I forget the percentage that they own. It's got to be something very substantial of the entire amount of BTC, the 21 million out there, 500,000 Bitcoin nearly is ridiculous. Valued at 48 billion. I remember when they started this in 2020, it was crazy that they were at like 4 billion. They have 10x'd how much they have there, but that doesn't mean that they 10x'd how much profit they've made. It's a lot of money that they keep getting in, and that's part of the problem that could continue to arise. The Tyson's corner-based firm led by Bitcoin bull Saylor poured in 29 billion, an average price of 63. Okay, so that was the last one. Bitcoin Reserve, he wants to get that to 100 billion by 2028. He's also put, that was the last billion. Okay, we've got that. Average price of 101, and that brought the average up to 63.5. Now, this is how it's done for the bond holders of MicroStrategy. Take a look at this, probably a little bit beyond the scope of trying to dive into this now in this video. Essentially, it's an entire leverage play on BTC. They sell the bonds, people who own the bonds, they paid, they don't actually get an interest on the bond, they just get the stock, and if the stock price increases, then they can convert that to the shares, sell the shares, and they make a profit from that. So you're going to get more than an interest on a bond that's usually single digits. If the stock price decreases, then they keep the bond, and I guess they would be in a massive losing position because, well, MicroStrategy is extremely volatile. Extremely volatile. It's done 4,000% since the low, right? So yes, it could crash. If it crashes, then MicroStrategy may have to sell a ton of Bitcoin because of liquidity issues. Now, this isn't new to people. We've heard about this last cycle. Fortunately, it didn't happen. However, if it keeps on this trajectory, that average price is getting closer and closer to the market. Before, we had a fair bit of room to move there, but wiggle room, it can get closer. Arthur Hayes has talked about this before, not having a dig at Michael Saylor or anything like that. He's just literally talking about what the the product is that Sailor has put together. People want this. Sailor wants this. That's their leverage play on the whole system. Now, Sailor wasn't as big last cycle, but this cycle is getting even bigger. So take a look at that for yourself. You can go check this video out. It's somewhere in the middle. It's a very long video. It's very, very interesting nonetheless. And have a read about how how this is set up with, how Michael Saylor has set this up for MicroStrategy, and how Bitcoin can go up into new highs, yet the stock price may not. So just because Bitcoin's going up doesn't mean the stock price has to, because those holders of the bonds could then sell to the shares, convert bonds to the shares, and then sell off to take their profits. It is, in the article it said it was something like leveraged, it's about a 3.5 times play on the Bitcoin price. So have a read of that if you're interested. That is how also that Bitcoin could collapse. Let's not go down that path just yet, but that's also how you could end up with something like this in the previous cycle, where you've got these bond holders selling off converting their bonds into shares, selling off the shares. The share price doesn't go any higher. Therefore, they're anticipating that the market cycle is coming to an end. And that's how we're looking at this, as a, maybe a canary in the coal mine, or some sort of look at the cycle at large. That was not the Bitcoin all-time high. That was the $65,000 high, and this was the $69,000 high. So a long way off that top. Maybe something like that plays again. We did see a new all-time high at 109, and it's now lower than those other December plays. Sure, this could keep going up, but we're still watching out for that $540 level. Now, I'd love to hear your thoughts about this whole strategy, this whole setup. Could it collapse? Is this maybe one of the big plays that unfolds towards the end of the cycle or during the bear market? Something else triggers it, and then we start to see this unfold during any sort of bear market. Like, subscribe. I'll see you guys back here at the next update. And of course, links in the video description for TIA Premium, the free financial report, which you received yesterday. And of course, Bybit, Bluffin, and SwiftX. All right, guys, keep a watch out for USDT dominance. Could be a big one. And I'll see you at the next video. Until then, take care. Peace out.